Wall Street is bleeding out from a massive AI panic right now. But if you look at the crypto market, it is strangely green.
Yeah, totally decoupled.
Right. You'd expect these two sectors to just sync together. But today we're doing a deep dive into the Vantage Plus weekly crypto analysis published on Monday, July 20th, 2026 to figure out why. We want to know, is crypto gonna, pull stocks back from the brink? Or is this AI shockwave about to drag digital assets down with it?
Well, the catalyst for this whole divergence started last Thursday in China. It was the release of a tool called Kimi K3.
Right, the new coding assistant.
Exactly. I mean, it's completely free.
Mm-hmm.
And the moment it launched, it just shot from 18th place straight to #1 on the global AI coding benchmark leaderboards. The market reaction was violent.
Yeah, wiping out what, like 600 billion?
Yeah, 600 billion off NVIDIA's market cap in a single trading session.
That is just insane. I mean, a free coding tool threatening NVIDIA's hardware dominance makes sense on paper. But how does a software release built on the other side of the globe suddenly threaten the crypto mining industry?
So you have to look at how miners spent the last 2 years. They stopped focusing purely on blockchain networks and basically rebranded themselves. They became AI data center landlords.
Oh, right, renting out their GPUs.
Yeah, they signed massive multi-year leases for high-end GPUs, basically betting that the demand for AI computing power was infinite and would just never stop growing.
So they took on huge fixed costs. And I guess if Kimi K3 undercuts the need for endless new hardware upgrades by optimizing that software side, the demand curve for all that rented computing power just flattens out fast.
Which leaves those miners completely holding the bag. I mean, they've got these expensive hardware leases with a sudden drop in tenant demand. They are incredibly vulnerable to this specific disruption.
Which makes Bitcoin's chart look completely detached from reality right now. It's trading at 63,978, just brushing off the weekend's tech bloodbath. It's even pushing back above its 50-day moving average.
It really is.
Are investors flocking to Bitcoin specifically because its mining networks use like specialized ASIC chip that couldn't even be repurposed for AI anyway?
That structural difference is a massive factor, actually.
Yeah.
Bitcoin miners were largely insulated from this whole AI landlord trap you just mentioned.
Makes total sense.
Because of that, BTC is testing key battlegrounds completely on its own terms. If buyers can push it above 65,000, we'll see real upside momentum. But if it breaks below the 62,000 support floor,
the panic catches up.
Exactly. The broader market panic finally catches up to it.
So let's test that resilience against Ethereum. It's sitting at 1,845. The Vantage Plus report notes some positive sentiment, but looking at the weekly chart, it's just creeping along.
Yeah, creeping is definitely the right word for it.
I'm just not buying the optimism here. It looks like ETH is just a passenger coasting on Bitcoin's fumes. I mean, it hasn't generated any independent momentum to justify the hype, has it?
The technicals actually back up your skepticism there. ETH has an open upside on the chart, but it desperately needs to break the 2,000 psychological barrier to prove it has its own legs.
Right.
It is participating in the rally, sure, but it's definitely not driving it.
And if we look further down the market, that coasting effect just vanishes entirely. Ripple and Solana are drowning. Ripple is stuck at 1.0830 after closing last month with a bearish candlestick.
Yeah, it's rough out there for the altcoins.
It can't even break its 50-month moving average.
Solana paints an even bleaker picture, honestly. It's trading at 74.58. What we are seeing with these laggards is basically the collateral damage of the AI stock crash.
How so? Like institutional spillover?
Exactly. When institutional portfolios take a 600 billion hit on massive equities like NVIDIA, they have to balance their books. And they do that by liquidating their riskier, highly volatile altcoin positions.
Which perfectly explains the psychology on the Solana chart. Every time SOL rallies even a fraction, traders are clearly using it as an exit door just to cash out.
Precisely. When you have previous rock-solid support at 80 hardening into a ceiling of resistance, it tells you buyers are completely exhausted. Institutions are selling the bounces, making falling prices the path of least resistance.
So for you, the listener, navigating this means recognizing that crypto isn't a monolith right now. It's a deeply fragmented market.
Very fragmented.
Bitcoin is temporarily defying the stock market's AI panic due to its unique hardware structure, while altcoins are being liquidated to cover Wall Street's losses.
Right. The surface-level decoupling between stocks and crypto hides a much more complex internal divergence.
It really does. But it all circles back to those miners who bet the farm on being AI data centers. If that entire sector faces a financial wipeout because of tools like Kimi K3, What happens to the underlying network security of the blockchains they've left exposed?
That is the real billion-dollar question.
Exactly. If the major miners go bankrupt, the security of those networks could go down with them. Keep an eye on that moving forward.